Lesson 6. Keeping Score. Why Credit Matters. In the middle of a championship football game, keeping score is the norm. But when it comes to life, many young adults don't realize how important it is to keep track of another's score, their credit score. This lesson provides strategies for understanding credit reports and scores, enabling you to make smart money decisions. You will explore different scenarios that challenge your assumptions about credit and creditworthiness, while debating the impact certain decisions may have on your credit score. What is credit? Think about your last purchase. How did you pay for it? Did you use cash, debit card, credit card, or did you write a check? Think about the differences between paying with cash, debit card, credit card, and checks. How does one get credit, and who provides credit? Have you ever loaned money, clothes, or even your car to a friend, and whether or not you expected to get the item back? Loaning out money, clothes, and cars are all examples of lending credit. Let's imagine you're going to loan your brand new car to a stranger. What factors would you consider before letting someone borrow your car? Would you consider age, gender, religion, work history, driving record, race, language, education, or income? What are some potential factors that would affect your decision? Take a few minutes to list those factors now. Lenders use specific factors to determine whether or not a person is creditworthy and eligible for a loan. There are 5 key factors that are considered when determining creditworthiness: payment history, amount owed to current creditors, length of credit history, types of credit used, and number of open accounts. These 5 factors are compiled on a person's credit report with an overall credit score that lets lenders know how risky it is to lend to that borrower. Some of the factors you believe should matter when it comes to getting credit actually don't. We might have talked about education, race, gender, age, religion, etc. In this range, if you look at the credit score here from 300 to 850, the first part from 300 to 4, 5, or 6, in this range you need to work hard to improve your score. Getting a credit card or loan will be a problem. Down below here, between 600 and 700, you're a fair to good risk if you fall into this range, but interest rates might still be a little bit higher. Pay your bills on time and reduce credit balances and your score will go up. In this range, you're low to moderate risk and should get competitive interest rates. What would you rather earn on a math test? 95 out of 100 or 55 out of 100? Just like test scores in school, the higher your credit score, the better. This is because a higher number means you are a lower risk as a borrower. Go ahead and click on this brochure and find out a little bit about what's my credit score. In this example, we'll meet Tina. Tina takes a look at the ups and downs of Tina's credit score during her years in college. She learned some lessons the hard way and eventually learned what it takes to maintain a good credit score. As you look at Tina's freshman year, she started out with an A+, and she ended up with a C. The start of her sophomore year, she started with an A+, she went to a C, to an F, and back up to a C. Her junior year, she ended up with a B, and her senior year, if you read the scenario, you'll find out what happened with Tina, and she ended up with an A+. When does your credit score matter? If you're thinking about your future, buying a car or home, or setting up your phone or electric bill, renting an apartment, and applying for jobs. These are situations where people will look at what your credit score is. To get a glimpse of your financial future, many businesses look at your financial past. This history is contained in your credit report. Your credit report determines everything from whether you qualify for a loan and the rate you will pay on that loan to renting an apartment and obtaining insurance. Go ahead and click on these two links. The first one will give you a little bit more about credit history, and then the bottom one will give you some information on background checks. After looking at the brochures, you should know what is creditworthiness and what are the components of a credit score. How is a credit score calculated? What is considered a good score? What actions impact a credit score? And why does having a good score matter? Why would a bank or cell phone company care about your credit score? Did you know you can get a free credit report at whatsmyscore.org by answering just a few questions? In today's worksheet, we're going to work on Lesson 6, Spot the Credit Differences. You're holding the keys to a brand new car, longing for a cell phone upgrade, and planning a trip to Disney World. But wait, will doing these things affect your credit? Determine now the scenarios below might impact your credit score. Remember, it can go up or down. Justify your reasonings and offer a solution to any negative impacts. Working as a team, discuss the scenarios on the activity sheet and determine how and why each scenario would impact your credit score. Your team should be prepared to justify your answers to the class. One person from each team should be ready to share one of the scenarios with the class and explain the impact that the scenario has on credit and creditworthiness. You should be prepared for all scenarios. Then I'd like you to do a reflection statement in your Moodle. Reflect about how your credit score might impact your short, medium, and long-term goals, such as finding a job, buying a house, or selecting a cell phone plan. In conclusion, making the grade, don't forget to think about these factors. Establish a good credit record. Be sure to pay your monthly balance on time. Running up your credit card is not a good idea. Pay off card balances instead of moving debit to other cards. And finally, check your credit score regularly to make sure it's error-free. Another flipped moment.